Alright, welcome to my weekly video here for the S&P 500. Situation has changed, so I'm not going to be able to do the twice a week videos for a little while. Just to recap on the plays and positions I was in. I had those, what was it, the 280 calls that expired, I believe, on the 9th of November. Worked my average down over here at 88 cents. Very nice move up into the close that week. Today, this day on the 7th, they actually hit 210, 215, 220-ish areas for almost a 200% gain. Wasn't able to close in that day. However, the next day, once price action failed to break above highs on this hourly basis, I did trail those out here around 160 for almost 100% gain. So I left some on the table. Just as I said, the situation has changed, and I wasn't able to actively manage that position. Luckily, it wasn't a huge position, but it ended up being very profitable and made up for the pain that I held through in this huge drop all the way over here. So, nice way to lock in some profits there. On the 9th, I also took a trade in some puts right here. It's kind of hard to see on the hourly basis, but this was a breakdown play. I got on the 277.5 puts here, just below 277.5. Nice breakdown. Took the majority off at 114, and the rest trailed me out here just about $1. So nice little move there. Didn't follow through too much after that, and they were same day expiration, so I did not hold over the weekend. Although if I would have taken the following week's puts, that would have been a very, very nice play. Anyways, this week I caught an alert in these December 300 calls here, 77,000 traded at a dime. So I added into the position that I do have, a couple hundred contracts now. Average is now 0.165. Looking to sell the majority of them at 32 cents if that does happen. It's probably going to happen up here between this 281-ish area, the 50 SMA, and this 286 level, which is the prior all-time high over here on the monthly time frame. I'm going to get to this chart here in a little bit. But anyways, I'm still holding those. I'm also holding the June 325 calls for next month, looking to sell those at $1. And because my situation is currently a little bit strange, I'm not going to be able to actively trade intraday too much. So this may be the last video until next weekend, and in which I will update the positions that I'm in again. I do have an automatic sell order for these to get out the majority of them at 32 cents. On to what I'm looking for into the near future here. Even though I do have this on the hourly time frame, I'm looking for a move up, continuation back up to highs, maybe by the end of the year, probably January, who knows. But the monthly candle here is still stuck inside of last month. Very normal for a huge move, huge sell-off to do this, just some digestion. And as I've said, I don't know how many times in countless videos, the SP 500 is designed to go up unless there's some huge outside force in the markets that just absolutely causes it to crash. I'm not going to bet against it unless it's just a small little intraday scalp. So with that in mind, still very bullish. And zooming out here, it's quite a bit easier to see what's actually going on the chart. And I can get a lot of these notes off here. This is just a little something I had drawn from last week before my situation changed. But anyways, it was a tightening wedge falling down. Nice move up. Again, locked in my profits on those calls. Created a nice breakaway gap which set in place, in my opinion, a new trend. We've now had, this was the initial low, now have a higher low, most likely going to take out this 281-ish area, especially now with some rhetoric coming out of the White House that they are willing to, and China's also willing to negotiate on a trade deal. So looking for that to break here soon. If that does occur, next level up here is going to be this prior breakdown here around 286, 287-ish area for a retest, which is also right here below. This was the September low, which was the initial breakdown of the prior all-time high as well. So a lot of reasons to be bullish here. Overall market is not all that weak. I'm going to get to that in a moment. But back to the plan I'm actually looking for. These green bars, these green blocks, is where the significant amount of volume has come in. As you can see, this was the third thrust down, pushed up right straight through all of them, came back down, retested that level, now trying to hold above the second level. So where significant volume comes in is very important in my opinion, and if we get back above all three of these levels, there should be no questions that we're actually going to make a new all-time high. Yes, we may get a death cross here in the 50-200 SMA, but by the time that typically happens on a lot of charts, price action has already sold off, and we're about to recontinue. Is that a word? I don't know. We're about to continue the prior uptrend. So Gonna stay bullish. Still have these lines on here proving, or at least demonstrating, that recent downtrend moves are broken, and we obviously have a new higher low. As long as price action holds above this 260-ish area, and ultimately on the higher time frame over here, the monthly of this 252, 255 area, absolutely nothing to worry about in my opinion. I may be a little short-sighted with these end of December calls here. May not have given myself enough time right now. Got about 6 weeks to go, so well within the ATR for the SP 500 to reclaim that level. How this month closes is really going to be the deciding factor. If it closes as a wide-ranging doji bar right here, it's going to be a lot of indecision next month as well until it can break above. Once it breaks above a level like this, that would be a bullish trigger, just like it was back here in April for a move higher. Now, I want to touch on the overall sectors of the S&P 500. I don't know what the hell this note is for. Um, these are the sectors of the S&P 500. So here is the real estate ETF. Not too much time on here, but overall chart is essentially going sideways. Nothing really scary there, just in a range. May come down a little bit, about looks like about 10%, although that sounds like a lot. It's only $3 in a $33 name. However, as you can see, a nice strong move up, pullback, two-bar pullback, volume, which most likely, as I zoom in here, is on lows, just like in the S&P 500. Yep, as you can see, huge volume here on the low, huge volume here, and continued up higher. So if it comes up here to this 34 area, it could potentially set up for a breakout. The XLF financials, as I zoom out here, we have now come up to prior all-time highs. This all-time high was 2007 and 2008. We know what was going on that time in the past. If you are of the belief that the market or the economy and financials of the world are in dire straits like they were in 2007, 2008, then there may be an argument for a move lower. However, what I'm seeing here is nothing more than a bull flag continuation pattern that has failed to break down. The initial breakout, which was something like this, did fail as well. Similar, very similar chart pattern to what happened with Bank of America. All it simply did was pull back, retest the apex, and find a significant amount of volume here. You can see on October. This video is going to be kind of long, so I'm going to go over each and every one of these sectors. But anyways, volume came in at lows, started to come in at lows at a prior support, put in an island bottom, which is a bullish reversal, and now put in a very strong bullish kicking pattern after some sell-off here. So breaking this trend line over the 50 SMA will most likely curl all these levels back up, all these moving averages, and provide a golden cross, which again, just like the 50 SMA crossing below the 200 is a death cross. It's a 50-50 shot whether or not it actually works. Anyways, going forward here into the XLI, the industrials, a couple lines are still on here. This is basically putting in a broadening pattern at highs, which is not necessarily reversal. The only thing that does look concerning is the volume that came in that wiped out virtually the whole year of price action. Now, as you can see, it came down, tested a downtrending support trend line at just what seems like a random number of 67. Again, where volume comes in is extremely important when these kinds of moves do happen. Now, this one in the industrials actually did come in on what I would consider a breakdown, a nice gap down, and continuation. Not necessarily a breakaway or a continuation gap in the direction of the overall uptrend, but if I draw a little trend line, if you're a trend line trader, these probably make a little bit more sense. I mean, I know that's not perfect, but you come into this area right around here. What happens with a lot of significant levels? Algos will see the buying pressure down there. Participants were buying probably close to the support. Stops were just below, which created this breakdown, this gap down below, ate up all that liquidity, and came down until there were no more sellers left. They were all taking profits, and it was time to go back up. Now on the daily time frame here, did put in a nice outside bar, so that is a potential bullish reversal. And just like the S&P 500, you can see a significant amount of volume here at lows and putting in a potential basing pattern. So that is the XLI. Onto the energy ETF XLE. This one actually looks the weakest of them all. You have put in a peak up here already, something like this, but it's also a potential uptrending channel. So this looks a lot like Facebook, where it sold off hard, came in, now it's putting in a little bit lower highs. Not necessarily a lower low yet, and the the monthly 200 SMA, which is not as important as the daily in my opinion, is still below price. Um, Monthly candle here is very bearish, wiped out all of the whole year. But again, we zoom in here again and see where the participation actually was. Just like XLF and the SPY, gap down, put in a double bottom. Now we potentially have a setup for an island bottom. And if I just draw a couple lines here, I'd say the island bottom would be anywhere from 70 down to about here 64.80. So in between these two levels, probably going to chop back and forth. If it breaks down below there, obviously there's going to be a leg down, but there was prior support over here from 2018, and overall the chart just looks like it's testing a support and it's going to be in a range. A lot of these ETFs are not necessarily trending patterns, not trending charts. They're just going to set up in a range until one side breaks. So zooming out here, the XLE, it's not looking overall weak. Again, on the higher time frame, just one candle that looks kind of bearish here. It's just setting up into a range, in my opinion. On to XLY. This is the Consumer Discretionary Index. Again, just like all the other ETFs, big sell-off here, volume off of highs, engulfing bar. Simply retested the opening price of the year and found support. As we zoom in here again, where'd the volume come in? Just below the 200 SMA. Slight follow through, came back down. Could argue this little bit of area down here is a potential island bottom as well. Just these three candlesticks. Did put in a wide range bar here. So essentially you now have this range that has set up based off of this 1029 candle. Beautiful high volume hammer candle here on the day for Thursday. Inside bar on Friday. Inside bars just show there's indecision in this day. There's a battleground going on. A lot of names did this. Breaking above will trigger stops and bring in more buyers to push higher. Breaking below will trigger stops and most likely trigger stops down here below 104 and probably retest these lows again. So just something to be aware of. But overall, XLY still in an overall uptrend, moving up and here moving up. Excuse me. You have higher lows and higher highs. So it is a broadening pattern. So it is possible to retest these lows, but a broadening pattern is not necessarily reversal. It just shows that volatility is increasing and the trend is still overall in an uptrend. Okay, on to XLP. This is the Consumer Staples Index. This year is actually already a red year and looks like it could potentially be one of the weaker indexes as well. Opening price is right here around $57. So it is a red candle as far as the overall year goes. And just looks like it's chop. I mean, the last couple of years here for XLP, that doesn't make any sense. Take that one off. We do potentially have what's the start of a downtrend. However, it's broadening. You have higher highs and lower lows. So which way does it go? Again, in an overall uptrend, and these ETFs, just like the SPY, are designed to continue to go up in the direction of buyers. So betting against an overall market or an overall sector, in my opinion, is not ever going to be a good idea unless there's something huge that goes on in that industry. But anyways, looks like if it reclaims this 57-ish area, we're going to get a test up here around 60, 61 level just to test that price target. It's just simply how price action works. If you have buyers pushing it up, there's going to be a price target up here somewhere. It's usually going to be above the prior all-time high. Now on to XLU, which is the Utilities ETF. This one again, actually no, this one is a green year so far. In the end of 2017, December is when the sell-off actually started to occur. So it's going to be important to see what happens up here around $57. Just draw a line up here. And the 50 SMA, as far as the monthly time frame, is holding up very nicely. Nice strong uptrend. Price action should be no debating. Is still making higher lows, higher highs, higher lows, higher highs. So if it makes a new move higher, probably going to sell off, retest another level down below, and find support. So all these wicks down here confirm that there are still a tremendous amount of buyers at support on lows and pushing the market up. On to XLK. Don't need this alert. This is the technology ETF. Price level. Prior all-time high is here around 65.40. And what a coincidence. We came down here last month, tested on a significantly tremendous amount of volume here. I'm going to zoom in here on the daily time frame, see what's going on. Just like the S&P 500, quite a few of these other ETFs I've already gone through. As price action came down to this level, we're putting in what could potentially be a base. Looking at something like this was the initial sell-off. Excuse me, there we go. And another broadening pattern. So not really anything to be concerned about there in my opinion. We've just simply retested a prior level of support, although we did break the 200 SMA, which we've done in the S&P 500 as well. But how many times has it broken and actually reversed and crashed? Here, here, really never, except for, of course, 2007, 2008. So I'm going to go with the statistics that are in my favor and assume that we're going to put in a base, reclaim the 200 SMA, reclaim the 50 SMA, and most likely come up to another all-time high. Not necessarily an inside day. It did pierce above Thursday's high on Friday. So if it is able to push up above the 68.70ish area, probably going to take out the stops above 69.30, and a retest of 200 SMA could happen in the next couple of days. It is a potential double bottom here, which also one thing that stands out here is we had an inside bar, which is a reversal pattern right here, and almost an engulfing pattern, excuse me, an engulfing day here on Thursday to confirm this is a potential double bottom. So right now the XLK is still looking good. XBI, which is the biotech ETF. Zoom out as far as I can here. Prior all-time high, as you can see, could not hold it, which is this 91.50-ish area. And it's just a coincidence these moving averages sometimes come right up to price. I don't use them on a monthly time frame. They just happen to be defaults on my charts. But anyways, this is another one of those red year candles here right now. This was the open for the year. Came up, retested, it has been rejected. So this industry, this ETF isn't looking like it's going to be too strong to finish out the year. But so far this month has been an indecision month. Nice battleground going on. Zoom in here to the weekly time frame because it's not as clear as what's going on. But as we get in here a little bit closer, I do have it highlighted here where the volume did come in here in between this 79.5 and 78-ish area, and price action seeming to hold around that level pretty closely, and a descending trend line has now set up. And as I zoom in here the daily time frame, see what that actually did. All right, so I can actually tighten that up a little bit and see what's really going on here. Probably touched it almost to the penny and found support. So put an inside day in here on Thursday, broke above, reclaimed the 8 EMA. Probably going to come up here, test a 21. May only do a dead cat bounce because it has put in a new lower low. And for now, if it cannot get above, I'd say at least this trend, sellers are still going to be in control. But again, where all the volume comes in is another important factor to consider. And as I zoom out here, historically, when volume has come in off after a breakdown, you can see right here 2016 put in a base, although it chopped around for a little while before it finally continued higher. We're basically doing a very similar pattern here, and just like the last ETF, you had inside bar, a couple inside bars to at least imply that there's a battleground and that the downtrend is actually coming to an end and looking like we're going to move up higher, although it did put in a false breakdown here off of the 77-ish area. Still looking semi-bullish. Again, I would not bet against any of these ETFs because they are designed to go up. XLB, this is the materials ETF. And again, something that is in a red year. The monthly, however, is showing some indecision, possibly setting up for a bounce into next month. Of course, that's going to take some time to set up. And here we're on the weekly time frame. Where did the volume come in? Significant amount of volume here on lows. Regardless of this purple line being the 200 SMA for the weekly time frame, volume came in on lows. It should be fairly obvious what's going on here. Had another essentially island bottom that has set up here, I'd say in between 52 and 50-ish area. Put in a nice move up, possible cup and handle here, could rally it up through the 50 SMA and up to the 200 SMA at the very least. Zooming out here a little bit more, it does look like it's a little bearish, and coincidentally may have actually, didn't quite touch it all the way, but almost put in a broadening pattern. It actually has put in a broadening pattern here for the year. which is again a consolidation pattern. Happened back here before it finally did rally into 2016. So a lot of very similar patterns are setting up here in a lot of sectors here for the S&P 500. As I've said a million times, I'm probably gonna say a million more. These ETFs are designed to go up through rebalancing, and if they didn't work, people would not participate and put money into them. So even with the shakeout that's happened recently, there's, in my opinion, nothing to be afraid of. The China worries are going out the window, and a lot of positive things are coming out in the market. So anyways, on to XLV, which is the healthcare ETF, which is looking like one of the, if not the strongest ETF of the bunch. Down here is the opening price at 82.80-ish area, and we're putting in continued new highs and higher lows. Although this is a tightening pattern, just shows volatility is decreasing a little bit. Still have plenty of supports down below. And again, high volume here in October. See what happened there on the weekly time frame where the volume started coming in. This one actually started coming in on that breakdown below the prior all-time high of 92-ish area. Zoom in here a little bit more. And just like the S&P 500, this one is actually looking stronger in relation to the moving averages. Very nice basing pattern here above the 200 SMA. So right now it looks like the healthcare ETF is actually the strongest in the S&P 500 right now. So some of those names are probably going to be the best, probably because Humana, what are the other ones, Aetna and Cigna are probably all performing very well. So um, not seeing anything really scary. And when I go over all of these ETFs, all the sectors of the S&P 500, there's really nothing that says stay out of it. This is the telecom ETF, the 11th sector of the S&P 500, which doesn't have a whole lot of activity in the month. There's only been 700,000 last month and 100,000 so far this month. Um, Overall, I mean, the simple way of looking at this, higher lows, excuse me, and higher highs all the way up. So simply an uptrend. If this does pull back, could pull all the way back down to 52, 54-ish area, but I don't believe the telecom ETF has too much of a weight on the S&P 500. So again, overall, there's really nothing scary going on in the market. Sure, there's a lot of trading opportunities. You may get shaken out sometimes, which is just a reason to be more prudent with your stops and your risk controls, and not to risk too much on any one play. But right now, real quick, this ETF also is putting in a very similar pattern to the S&P 500. So possible basing pattern, possible inverted head and shoulders. A lot of these have these measure moves where simply take the height from wherever the lowest peak is up to that flat level where the resistance shows and add it to itself. So essentially this one is going to be from 66.5 up to 72.5. So $6 could potentially push it up to about 78.5, which does take it just outside this prior all-time high, at which point something very similar will occur where it has a prior all-time high, breaks above it, sells off, breaks above it, sells off, breaks above it, probably sell off again. So very indicative of an overall uptrend. Again, nothing to be scared about right now unless there's something extremely negative that comes out in the markets. Stay the course, do your thing, and for me, still going to be a perma bull, still going to take the S&P 500 long and look for swings with at least a couple of months of time once I get out of these December 300 calls. Well, that's it for my recap and plan for next week. I apologize if the video is a little bit long this time. Feel free to give it a like, subscribe, whatever you feel necessary. If you have any questions or comments, you're welcome to leave them down below, and I will get to them as I am available to. Well, have a good evening, and good luck on the open tomorrow.